One signature could legally change how much you pay in taxes. I am talking about the signature you put on your LLC or your S corporation formation documents. You see, most CEOs believe that that signature is simply creating their business, but it isn't doing just that, okay? It is also determining how the IRS will tax your business when you first started all the way up until now, okay? And here's what most CEOs never see coming. The entity structure they chose years ago is quietly costing them thousands of dollars every single year in taxes to this day. All right. The reason is because the entity structure served the business when you first started. But now it could be doing more harm than good because the business has grown. Well, today's episode is all about one of the most overlooked tax mistakes I see established consulting firm owners making, and it has nothing to do with missing deductions or filing late, but instead it has everything to do with the entity structure you selected years ago. Let's get into it. Welcome back to another episode of the Say Yes to Profits podcast. I am your host, Dr. Octavia Connor. If you've ever asked yourself, should I have an LLC, an S Corp, or a C Corp, you're asking a really good question, but it may not be the most important question at this time. Now, the better question is this. Is the entity structure I chose years ago still the right structure for my business today? You see, many CEOs treat entity selection like a one-time commitment and decision. They choose an entity structure when they started their business, they file the paperwork, and they never think about it again. Is that you? Meanwhile, your business continues to evolve. Your revenue grows, your team grows, your profitability grows, you hire new employees, you expand into new markets, you add new services, and you really begin to build wealth due to your business's success. And so everything about your business changes in an amazing way. Everything except the entity structure. That is. You see, your entity isn't just a legal thing. It's not just a legal structure. It's one of the most important tax decisions you'll ever make as a growing business owner. Now, the good news is that choosing an entity isn't like a lifetime commitment. It is a structure that should be reviewed as your business reaches the next revenue and profitability milestone. So the first thing you need to know is this. An LLC, an S corporation, and a C corporation are not simply labels you attach to your business. They mean something, okay? Each of them has a different tax implication, all right? And understanding those differences is one of the first steps towards building a custom tax strategy that will enable you to pay the smallest legal amount possible in taxes. So let's begin by discussing an LLC. Now, an LLC or limited liability company is one of the most popular structures because it provides liability protection while offering flexibility in how your business can be taxed. But here's something many CEOs don't even realize, okay? An LLC is, hear me clearly because this is going to make a difference later on in the episode, so you want to get it right now, okay? An LLC is a legal entity. It is not a tax classification. And so in other words, forming an LLC doesn't automatically determine how your business will be taxed. Got it? Yes, yes? Let me know in the comments. Now, the IRS allows an LLC to be taxed in different ways depending on the election you make. that is why when someone comes to me and they say, oh, I'm an LLC or I'm an S Corp, I ask them about their tax history because that will help me determine which one they should actually be. Like literally, I just had this happen. I just got off the phone right before recording this episode with the client that came to us because her previous CPA decided to have her become an S corporation without telling her the tax implications of being an S corporation and the things that are going to affect her personal taxes with her and her spouse. And now her spouse is a little bit unhappy because a lot of the profit flow through to the personal tax return and she wasn't expecting that. And so those are the type of conversations that you need to have to ensure that you have the right entity today. Now, with that being said, let's talk about an S corporation. So, contrary to what many people believe, an S corporation isn't, hear me now, a legal entity you form with your state. It is a tax election you make with the IRS, and that designation matters, okay? For the right business, electing an S corporation status can create significant tax savings, but for the wrong business, like what I just explained, it can be one of the most detrimental decisions you can make as a entrepreneur, as a growing established business, okay? Now, one of the primary reasons why an S Corp looks good and could be a really great decision is that it reduces self-employment taxes when the business generates significant profit. So self-employment taxes as of the date of this episode is 15.3%. You're going to pay that if you're just a single member LLC. When you are an S Corp, it reduces that significantly. However, an S corporation also comes with additional responsibilities that a lot of internet experts do not explain. For one, you must pay yourself a reasonable salary as the CEO of the company. For two, you must process payroll. So you must become an employee of your company and pay yourself a reasonable salary in the IRS eyes, not your eyes, in the IRS eyes. Okay. Also, you must meet additional compliance requirements like your distributions should never be higher than your W-2 salary because then you're doing tax evasion and that could be some serious problems with the IRS. And we don't play with them and they don't play with us. That's what I tell my clients. We do what's right all the time. Period. Okay. Now, that is primarily why becoming an S Corp should never be based on a viral social media post or reel or just some random friend recommending that to you. It should be based on a comprehensive review of your business. Here's the thing. When our virtual CFO and tax strategy clients reaches a stage where an S Corp may be beneficial, we conduct a strategic entity review as a part of the decision-making process. Like we evaluate their revenue, their profitability, their compensation now, and their compensation that is needed in the future. We evaluate their long-term goals, their overall tax strategy. Like we look at everything to determine whether it is the right next best step for their business and their lives for that matter. Like our goal is to determine which entity will create the greatest tax efficiency for the business that they not only have today, but the one that they're building for the future. And a lot of times people will see the internet experts and just go make this change, or they'll go and make this change with someone that just wants to do it without that person truly educating them on the impact now and in the future, whether it is good or bad. Do not do that to yourself, because if you are, or if you did, you have done or will do a disservice to you and your business. Get it? Got it good? Yes, yes. All right. So now let's discuss a C corporation. So a C corporation is taxed as its own separate entity. So unlike an S corporation where profits generally flow through to the owner's personal tax return, a C corporation pays corporate income taxes. And as of the recording of this episode, it is 21%. And so when you're thinking about becoming a C corporation, you need to think about that. Now, there are great situations where a C corporation is an excellent decision, particularly for companies planning to attract investors and issue stock or retain earnings for future growth, right? In those cases, being a C corporation may be the best entity for you. But For many established and growing consulting firms, which is the bulk of our clients, it's not always the best, most tax efficient option, okay? And so here's the point I want to make. Here's the thing I want you to remember. The goal isn't to determine whether an LLC or an S Corp or a C Corp is the best entity right now. The goal is to determine which entity structure is the best fit for your business based on where it is today and where it will be in the future. Got it? Yes, yes? Now, that is a conversation that a lot of CEOs never, ever have. They'll make the initial decision and never change it, or they'll make a decision right now without really factoring in the full financial and tax picture. Like oftentimes you choose an entity and you remain with the entity that you started with. And then you spend years growing your business without ever stopping to ask whether the original decision still serves you today. And then your revenue increases at the same exact time your tax bill skyrockets. And then you're left wondering, why am I paying so much in taxes? Have you ever asked yourself that? Well, the answer may not be the amount of money that you're making. A lot of times business owners think, oh, well, this is just the cost of doing business. That may not always be the case. It may be that your tax structure hasn't evolved, okay, with your business, all right? And that is the tax mistake most CEOs never see coming. Did you? You assume the entity that helped you start the business is automatically the best entity that will enable you to scale. And sometimes that's true, but many times it isn't. That's why your entity should be reviewed, not just when you're starting the business, but again, if I've said this several times in this episode, I'll say it again, it should be reviewed as your profitability increases, as your revenue increases, and as your business become more sophisticated, okay? Bottom line here, the right entity structure will ensure that you're paying only what you legally owe in taxes and not a dollar more. You understand? Yes, yes. So for this episode of the Profit Check Yourself moment, I want you to ask 3 simple questions. Number 1, when was the last time my entity structure was reviewed? Number 2, has my business changed significantly since I chose my original entity structure? And number 3, do I actually know why my current entity is the best choice, or have I simply stayed with it because it's the entity I've always had? If you don't know the answer to any of those questions, it is time for you to find out immediately. Don't pay another tax bill without first understanding whether your entity is still the most tax efficient choice for your business. Understood? Yes, yes. Let me know in the comments if you got this, okay? And if you would like to learn more before making any decisions, I want to personally invite you to join me for my upcoming Say Yes to Zero Taxes Masterclass. During this live training, I'll go much deeper into entity structures. I'll explain how to determine whether your current entity structure is still a fit for your business and if it will be a fit for the future. And I'll share additional tax strategies that many CEOs overlook, and then they pay more in taxes than they should. The goal is simple. I want to help you stop paying the IRS their legal share and an extra tip. I want to help you get on the path to say yes to zero taxes, okay? Now, on the other hand, if you're at a stage where you're like, hey, I'm ready to stop guessing, I'm ready to start working with a team that has a proven track record that will help me create a custom tax strategy, like I don't have any more time to wait, then I invite you to schedule a profit and tax gap analysis with my team. During your profit and tax gap analysis, we'll evaluate your current entity structure. We'll identify opportunities to improve your tax efficiency. We'll uncover areas where you may be overpaying in taxes, and we'll determine whether your current financial structure supports the business that you're building for today and the one you're working towards the future. Okay, so you want to click the link in the description to join me for my upcoming masterclass or schedule your profit and tax gap analysis. Either way, I want you to not make the biggest tax mistake as a business owner that I see often, which is choosing and remaining with the wrong entity structure. I want you to get that fixed right now. Yes, yes, put entity fix if you're going to work on getting that fixed in the comments. All right. Thank you for tuning into another episode. This is Dr. Octavia Connor. And until next time, say yes to profits. Toodles. Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now see you on the next episode. Say Yes to Profits. Toodles.